Okay, welcome everybody to this webinar where we are going to discuss practical supply and demand. As I mentioned earlier, there are a bit of construction work in front of my home, and so I apologize for any noise. It sounds like the whacker has been switched off, which is great. So let's hope that they don't interrupt us here while we talk today. We're going to talk about maybe half an hour or 40 minutes, and we can maybe have some questions at the end if there are any. So what we're going to discuss is something that I refer to as your practical supply and demand. And so supply and demand is a pretty simple concept, but it's just a matter of identifying these nice areas of supply and demand that we can consider to trade. And I've composed this this checklist here that enables me to, well, it enables anyone to objectify the process of qualifying good supply and demand. But before we kind of look into these individually, and maybe we'll skip a couple and maybe we'll focus on others, I just want to show you like the main concept of how I like to view supply and demand. Well, ultimately, you have to find an area in supply and demand that was strong enough to accomplish something. And when I say accomplish, I mean it had to, for example, cause market structure to fail. And when I say market structure, I'm referring to trend lines, because we have, if we just drag another pair on here, we'll delete the indicator, and you can see we have price wriggling up like this. And some people like to make sense of price, and this they do by attaching channels or trend lines to these lows and to these highs, and by doing so, this enables them to kind of make sense of price. And you can see that we have this trend line that goes from this low here to this low here, and price is just kind of struggling to move through it now at the moment. And drawing trend lines or these other channels that exist like so, I mean, it makes it possible for us to make trading decisions based on what we can see here. And you can see that price, while not completely, managed to stay within the range of this little price pattern here. You can see we had an upward sloping channel here. Price kind of stuck to the bottom of it, and it managed to respect it somewhat here. And if we move this up to here, just so we have something to look at, and somewhat here. And so this is what we'll use to define the structure of price. I like to use trend lines because if I'm looking to qualify an area of supply, I want to see price break down, moving lower. Because this enables me to qualify an area of supply. And so let's have a kind of a quick look. We're going to start on this chart. We're going to go back in time, and then we're going to kind of move toward current price, and I'll show you how the process works. And on my platform, you can see from about here, something funky is happening. We're getting kind of 2 times, we're getting double quotes, which is a little bit off, but it kind of starts here, the prettier price action. So we're going to look at that. So ideally, supply and demand, we want to focus in an imbalance in supply and demand. And if price manages to move up, accumulate, and then leave the area very quickly, then we'll call this supply. If price manages to move down, accumulate, and then move higher, we'll call this demand. And so here we have this little area here. Price kind of wriggled up, and then it tested something in here, and then price left very quickly. You can see this nice extended candle. We'll call this a price imbalance because price has left parity. Parity is price trading at parity here, so at fair price, which is roughly at the point where price left. So when price comes back to here, it is balanced. When price leaves, it is imbalanced. So currently price is out of balance from this price structure here, and it'll remain out of balance until it returns to this. But we can have an imbalance here, we can have another one here, and another one here. And I'll just walk through this and kind of narrate the process. So price left, we're out of balance. So we have price at this parity. Price formed another price imbalance, which was price returned to parity for this one here, just here. So we kind of touched the lows of this accumulation candle. We left, so we're out of balance. We're back into balance. We're out of balance. We're in balance. So price returned to this accumulation. And the same thing happened down here. Price left. And price moving down here was actually it rebalancing this price inefficiency here. So price went higher, it went down, it removed to the origin of this move, and then price went up here and it closed this one. And so all of these are nicely dependent on each other. So price moved higher, we crawled sideways for a while, we went up and we sold off, we dropped once and then twice. And you can see here, this is an important point here, how we had a certain respect for some lows here. Initially, we have this one here, which is considered the parent, and then we have the child here, because this is a reaction to this, something down here. And price managed to move off these highs and move down, and it managed to cut through the lows here. So this low here, but also, off this low here. So price managed to move through here and through this one here. And then you ask yourself, well, what area of supply managed to break the structure of price? And it's this one here. And the source of origin for this move is this one here, because price went down, we rounded this top, and then we went down. So this is kind of a continuation pattern within the move from the supply all the way down to the current low here. And so ideally, we would have our area to buy around here. Let me remove, excuse me, these. We'd have it like that. But once price moves through it, well, then you move the rectangle to the area that caused price to consume this demand, which is this one here. So this is the one that we expect price to move on at a later time. And price came up to it. So it's been tested once. And you can see here how it went almost all the way through it. Well, this tells us that the liquidity available in this small pocket of supply is pretty much consumed. For the time being, it was enough to hold price, but I mean, price did move through it. And you can actually see, very carefully, you can see that there's a blue dot just above the rectangle. And this shows us that it did indeed go, there it is, it went all the way through it. So this little pocket of liquidity is now gone. So we can remove this. But before we do that, you want to ask yourself, what area of demand took this out? Well, we have something down here. So we have something down here. This is not really demand, but I'm just going to put it like this. So we had something down here that's done this. And I mark this off here because this is where price tested on its way up. When price formed this, we tested it once, twice, and price moved through this supply. And this is the one that did it. And now you can see that this one here has been taken out by this one in here. And so we can actually mark off, we have like a little supply just here. You may put something like that. And this is where price came back to roughly. And then, I mean, is this still valid? Well, it's been tested once. Actually, once here on the release, then twice. On the third time, price went through it. Then you ask yourself that question again. What area of demand took this out? Well, it's this one just here. So you move this to here. Like so. And this is when you trade. And this is where price came back to. It left, it went higher, it came back, it tested the area, and it wriggled around for a while. And then we had market structure failure, the market structure being the lows here. And then you ask yourself, well, what area of supply broke the structure of price and this area of demand? Well, it's this up in here. So you can move this from here to here like that. And you can see that this one here, this poke up shows us where the edge of the area is. So like that, just something like that. So price tested it, and it tested it again here. So we got the reaction that we were expecting. Price went down to this one here. This is an area of demand simply by looking at the structure of how price went down, and we accumulated for one period, and then we went higher. And now price is managing to wriggle up and through it. So you can see here that when price is gone, this supply is gone, and the area that did it is this one here. I'm going to move this line. I'm going to move this down to here. This is the one that did it. And price tested that, and it went higher. And this looks, and you see price reacted on the rectangle here. If we go back, and have a look what that was. Well, this was the high of this swing here. We had like a sell-off, accumulation, sell-off, accumulation, sell-off. So this was the continuation pattern between this supply and the lows here, and this is actually the point of origin for the move that took out this low and this low here and the other one down here. And so this is a relatively important area. It's not a pretty one because of all the trading there. You can see there's a lot of agreement in supply and demand here, which is not what you want to see. You want to see something more like, for example, this up here or this down here. But price left showed us roughly where the edge of the area is, and we drew our rectangle there, and this is where price came back to roughly. And now we're having a bit of a reaction there. And so prices are wriggling between those two. And so you can see that this one now is gone. So the lowest one is gone. So we'll move that. We'll need that in a second. We're going to find out which one did it. There's this one here. And you move forward. And this one's gone. This one took it out. It wasn't a big break there at all. And then you look at the area that took that out, and you can see that just below, just here. This is actually a child, and the parent is in here somewhere, so we could actually move it like this, like so. Got a tiny reaction, but it's pretty quickly consumed. Then you can see here that this one here is the one that kind of caused price to hold and move through. Actually, we had this one here, which really had a strong push through. So we mark that. Expect price to react there. We had a small reaction there, then price cut through it. Price moved through it from this accumulation here. Tested it, now it's gone. Which did it? Which one did it? This one did up here. And then we have this, which one was it? This area here is the one that caused this one down here to be completely removed. This is where price reacted more or less, pretty close. But you can see all of these have been taken out here. If we go back to the right, these are just some areas that I marked off. We had this one here. And this was marked off because it's just a nice pattern. Price rallied. We accumulated for 1, 2, 3, 4, 5 periods, and we moved up. That was just a decent area, and then price tested it once, twice, 3 times. 1, 2, 3, 4 times, and this one was the one that took it out. So we mark that off like that. Move it here. Got the test there, but now this one is gone, and now we're kind of back to the same area that we were a second ago. So, I mean, this one is gone, and we have this one here that did it. But you can see now that we have this one, and we have this one, and we have this one. I mean, which one do you choose? Well, you have to consider a few things here, and we have this list here, and these are some of the questions that you want to ask yourself when you're looking at these areas of supply and demand. We have something here called the parent-child relationship. I mean, what is the parent and child relationship? If I look at this next slide, first of all, you have to ask yourself if it is a parent or a child, and we'll look at this again, and you can see that the one that did this, the one that caused that area to disappear, is here. Now ask yourself, is this a parent or a child? And what does that mean? Was this area established independently of any other area? No, it wasn't. What does that mean? Well, that means that this is a child, which brings our attention to this one. And you say, okay, was this one established independently of any other? No, it wasn't. Which area is it reacting to? It's this one down here. And so this is the one that's interesting to us. But if you can see, we have a rectangle down here at the bottom. If we scroll left, you can see that here we have the real demand, and here we have a reaction to demand here. But this is an okay area because when price reacted, it moved off it, accumulated, we tested the edge of the area, and then we moved up very, very quickly. And so if we come back to our list here, we have these questions that we can ask. Is this a parent or a child? Is it a child? So if it's a parent, has price been back to that area before? We go back here. Has price been back to this area before? It has. It's been back to this area before when it tested this one here. What would that do? Well, that would mean that this is potentially an area that price might move through on another approach. And so you have to, ideally you want to take the first test, as we saw in some of the other areas that we looked at. I mean, they would typically hold for the first test, maybe the second, maybe even the third or the fourth test, but they can't hold forever. Every test up into an area of supply or down into an area of demand thins out the liquidity available for sale in that area. And so each poke weakens the area. So you want to keep this in mind. This was established. We had trading just above the area here. Price poked into the area here, and then we left very aggressively. Okay, if price has been back there before, how did price react when it was back there the first time? You could see when it was back there the first time, which is pretty much here. I mean, after it was established, price really shot up higher, which is good. So that tells us that this area here is potentially going to hold, or there's a higher likelihood of it holding in the future than not, depending on the news, of course. And if this is the first time back, well, this is like a kind of thumbs up. This is good. This is what you want to see. But typically, you'll see you're sort of answering a child to the question, because these areas are often nested within one another. Child areas of supply and demand can certainly be traded, and they will often work out well, but they are slightly less probability than the parent. So it's a really good idea to identify the parent by backtracking in the same manner we did just a second ago when we walked through this price here. Is this the first time back to the parent? If so, it's good. If not, how was the reaction the first time price came back? You can see here that price came back to this parent and we reacted. We came back. And so, I mean, price reacted to this area, this child area, once already. So we're expecting the next test on this area here to be less probable. So we can see, I mean, price cut down. It went through the child and it stopped at the parent. We had a bounce at the parent, and then price managed to move all the way through the child and the parent. And then you ask yourself, okay, what area of, let me mark these so I can grab a hold of these in a second. Now, what area of supply managed to consume these two? Well, we have this one here, which is a continuation pattern. We have this one here, which is a continuation pattern. Then we have this one here, which is more of the top for this. So this is probably like a weekly top, just here like a swing high on the weekly chart. So these are gone. And we mark off these areas here. We have this one here, which is the lower one. And then we have this one here, which is the one that was just above. And we look at these two, you can see that we also had this bounce here. So price bounced here. We had another bounce just above. And we had another bounce just above that, just here. So you can see that price went down to the level, rejected, went down to the level above that, went down to the level above that. And so when price left here, this is the origin for this whole leg. But in between the supply at the origin and the low, we had a few independently established areas of supply. This one here was pretty good. We had a reaction at the lows, more or less. Then it was taken out by this here. So we can move this one down to here. And you can see that here we have an accumulation candle, and this candle just here poked in pretty far into this wick. So whenever you see a wick like this, it's telling you to go to the smaller time frames and refine the entry. So we'll do that quick. We'll go to the 4-hour chart. So I can find out where I am. It's always a joy in MT4. Completely lost now. Where are we? Okay, we won't do that again because we'll get lost. But you can see that we had a wick here. And this candle here went as low as this. You see this candle low, this candle went poked into the wick down to here. This is telling us that this is the low, or this is the upper edge of this area of demand that took out this supply. So we move it from here down to the low of the candle that poked into this area here to the wick. We had a small reaction there, and now it's gone. This here took it out. So we have this here, which is now the one that did it. So we'll move it just do it like that. And then we have this one here, which is also interesting. And this was interesting because when price left here, we managed to move through this support and this support as well, and essentially this one, because these three were all linked together. And so we can remove these like that, and this would be the entry that we would expect price to give us some kind of reaction. It's not always going to react like that, but sometimes it does, sometimes it doesn't. Then we have this one above, which is kind of the origin. But if you look back to the list here, is this a parent or is this a child? Has price been back to this area before? It has, and quite a lot. If you look up, you can see that we have this just here. And as we did down here, if you look where the wicks have poked into last, you can see that they've been back to around this price level before, once, twice, three times. So this is where we can expect price to react next time. Keep in mind that it's already been tested once, twice, three times, which means weaker. So it's getting weaker on each following test of a given area. So it poked into that area, and then price managed to break down, and below this area of supply, we managed to form these small areas of supply that were being respected. So this is just telling us that we have a nice respect for supply down here. Okay, so we have this one here, and this one is gone. What area did it? This one here. Let's remove this here. And then this one is gone. What area did that? Oops. This one here. And then this one is gone too. So we can move this back to here. And this one is also gone, and this is pretty much from the same place, but we have an area just above, which is just here. We can just take this whole area. We had a small reaction there, and that was good enough to hold price. And we had this one that was tested once, twice. So we'll go back, sorry to race over like that. And it kind of went up here. So this one is actually gone now. Sorry, I got to mark that so I can get rid of it. So that one's gone. And what area took that one out? Or something in here. But this is not nice because there's a lot of trading here. You can see how price has been moving sideways. There's a balance in supply and demand here, not an imbalance. And the only area, if you look at this whole leg here, the only area of any real demand here is kind of located like around here and here. And we have something down here and a little bit here as well. This has already been tested. This one is untested. This is also, it's gapped up. And so, I mean, we don't expect anything in here to hold typically because there's so much testing. So you want to find the nice clear areas where there's nice kind of rally accumulation and a move higher, which we had here, but this has been tested. So we don't expect this to hold. And then we have this one down here, which is where we gapped up. And a gap is good because a gap normally shows us that there's a keen interest to buy. As a matter of fact, there's so much buying that the price feed, prices couldn't keep up with it. And so price was requoted a little bit higher. So buying caused price to kind of gap up like so. So this is a good sign. This is telling us that there's a strong interest to buy here. And also when price left here, we moved above this high here. So we have a market structure failure at this level too. And this is the one that caused that. So we can expect a reaction in the future. So we got a small reaction there. And price is kind of wriggling down. This one took that one out. So I'm going to move that over here. It's into here. And we'll put it like that. And price came to the wicks here at the bottom, like that, which is where we got the reaction. Tested once. This one is also gone. We're going to remove. I'm just going to mark these so I can remove them if I need to. This one is gone. And this is the one that pretty much did it. Then we have price reacting on this one here. You can see that price managed to take it out. Maybe we came from here, but there's a lot of trading in here. You want to see these nice clear cutoffs like this and like this, which we don't have here. This is just kind of price just drifting lower through here. This is perhaps not a very liquid time of the day. So price drifted lower here. This is still intact. And I mean, we can see the price poked up in here. This is just a reaction to this supply, as is this. I'm going to remove that because it's gone. And then price finally managed to poke through this area. Then you ask yourself, what area of demand took these out? Well, we can see that very clearly. It's this one just here. I'm going to have to remove this because I can't grab a hold of it. I'll just mark this one off here, like so. We had a tiny reaction and now it's gone. What does that mean? Well, that means that we have some supply that is strong enough to consume the liquidity here. Where is that? It's right here. And then you ask yourself that question, is this a parent or is this a child? What does that mean? In other words, that means, is this supply or is it a reaction to supply? This is a reaction to supply. Supply is here. So you always want to ask yourself this question. See, this is a supply, this is a reaction to it. So if you're selling here, it may hold, but price will very likely move through it and go up to the real supply, which is just above. It's not far away. It's only, let's see. Okay, this is the Euro Kiwi, so it's a bit of a wild animal. Yeah, it's a few pips higher, quite a few pips higher, 60 pips higher. We're on the daily chart as well. So, I mean, this is showing you where that area is. So that's what we have. You can see down here that we had this area of supply that was here, that was taken out by this one here. And the origin for this move, this whole price structure here is standing on a kind of support or a price leg, and that is this one here. So this is the origin of this entire price swing here. And this is a parent or a child. Well, if you look here, you can see that there's something going on in here. If we have a look on the smaller time frames, we can probably find out what it's doing. And it's reacting to, let's see, let's draw a line in here. And it's reacting to this. So this is the real demand. And this is a reaction to that. So this looks like demand on the daily chart, but it isn't. It's a reaction to this 4-hour demand here. So we can expect price to do something to react, starting from the 5180 area and then going down. I can't even read that. Let's go along here and going down. I'll remove that. Going down to around the 151 area. So it's a pretty tiny one there. Let's see, the stop is 38 pips, so really tiny. So that's what we have now, and that's pretty much I think how I like to run through these charts, focusing on supply and demand. And so it's pretty simple. We'll do another example. I'll do this one here. I can see I've got an order in here, and we'll see. You can see that we have this here, which was tested a couple of times, once, twice, and this one here caused this one to break. So what does that mean? Well, that means that something down in here caused price to move higher, and we had a really strong close above that area there. So if we go to the weekly, maybe you can see that on the weekly chart, price rallied, started to accumulate here, move sideways, and then we had a really nice cut higher above on the daily and on the weekly. So, I mean, there's something going on in here that looks pretty interesting, I think. Will it hold? We have no idea, but it's probable that we'll get a reaction at that area there. And this is independent. This is not reacting on this. This is a continuation pattern price. This is reacting to this. So we have the demand here, like that. So it's been tested once, twice. Price left the second time. We moved higher, accumulated, and then we cut through that one. So this one is gone. We put it here. Or you can ask yourself the question, is this apparent, or rather, where's the origin of this? And the origin is, well, we have this demand here. We have this demand here, and we have this here, which is a child, and it's reacting to something down here, which is really messy. So you can mark off the lows like that, and then look left and see what price is reacting on. So you might have to go back a while. You can find that line. No, we don't want to waste time doing that, but it's pretty far back. So price is pretty low. This is a very low price point here. You can see. I mean, yeah, it's the lowest. That's why. It's the lowest price that my broker is giving me a price of. So this is a pretty interesting area, and we'll see what price does it. The 125.75. Just a really nice, strong cutaway. Another thing that I've been toying with is paying attention to the opens and closes of the greater period. So I've made a little visual tool that helps me do that. And so I can, from one chart, see what's going on. So you can see here that we have the red is daily, the blue is 4 hour, and the white is 1 hour, and the orange is weekly, and the purple is monthly. So here you can see this is an order to sell in here. And this is actually on the weekly chart. As a matter of fact, I could move this like there, right up there, because you can see we had this area of accumulation. And when it left, this nice price imbalance, when it left, the high of it is about right there where the entry is for this. And price came down. We tested it once, so price has already been back to that level. And now we're expecting perhaps a deeper push higher into the roughly the 74.80-ish area. This is a week monthly chart, so it's probably pretty far away from that, but let's have a look. Yeah, the 74.80, that's fine. That's fine. So entry is around that, and the stop is just above the highs here. And you can see that this is pretty close to the close of this week of trading. So this week went down, we accumulated, we went down, and we gapped down. And when price came up and tested, it tested the edge of this accumulation candle, which was also the close of the previous week. We had a nice reaction there. Then price sold off. We managed to close below the previous month, which is a pretty clear sign that price is going to continue moving lower. And then price came up. We tested the low of the previous month, which overlapped nicely with this area of accumulation right here, the 75.54. And so more and more, I'm paying attention to the closes and the opens and closes of these previous periods. And so I've just made this tool to help me visualize it so I can do some more testing. But this is if you want to pay attention. You don't have to. You can focus on supply and demand exclusively, but just kind of clicking through the charts like that enables you to kind of see what's going on. Just going to see if there's... Okay, Al is asking, what are those colors? Well, the colors simply tell me some information about the time frames. So the purple is the monthly, the orange is the weekly, the red is the daily, blue is the 4 hour, and the white is the hourly, and then so on all the way down to the 1 minute chart. So you can see here, we can see very clearly that we have prices really moving higher on the weekly, and you can see that we have some macro continuation patterns. We're on the 4 hour chart. So when I say macro, I'm referring to a time frame higher, or one of the time frames higher. If I say micro, I'm referring to one of the time frames smaller. And you can see here we have a really nice one here. When price left here, we managed to move through this accumulation here, and managed to eventually move all the way up to around here. So we have price rallied, accumulated for 1, 2, 3, 4 days, and then we moved higher. So here we have market structure failure here. We had this little continuation pattern which caused price to move below these lows. So this one, we can draw that in quickly like so. That happened like that. We tested once, twice, and then it cut through. And so this brings our attention to something down here. So what's the area of demand that took that out? Well, we have it just here. You can see we have, it's pretty messy. There's a lot of trading in here. So you want to find something that has a nice clear cutaway. We have that here. So from around maybe there to there. So see it, about the 7,300, the big figure, like around a 20, 30 pip stop there. That's just a really nice cutaway because we managed to move straight through that, which is pretty handy. And so, I mean, this is what I'm doing. I mean, I made like a tool that enables me to see this stuff. So the software is qualifying these levels for me on the fly, which is really handy. Let's find this one here. Go to the hourly chart. You can see how these levels hold. So this has been qualified, this 4-hour supply. Price comes up, tests it, then we have a huge release. Price comes down here, it accumulates for a little while. We establish this daily demand. Price tests it once, twice, and then we go racing up to this child 4-hour supply, and from there we react. Now price is headed lower. If you have a look on the bigger picture, you can see that we had this weekly supply above price, and you can see we had this this 4-hour supply here, which was nested within the daily supply, which is great. You know that we have this red rectangle. Price moved up into it. We accumulated. We sold off. We poked up, touched the lows, and we left. And so this enables us to refine our entry now. We can see that we are reacting to daily supply, which is pretty big. So we can expect price to move lower from here. And so we wait. You don't have to guess. You don't sit here and say, okay, I think that we're probably going to move lower because we're a daily supply. You don't do that. You wait for price to show you, which it's done here. And so this green candle leaving these white candles tells us that we have an imbalance in supply and demand. The strength is on the side of supply. What happens? Price goes down. We test this little accumulation, this demand here, and price pokes up higher into these lows. And from this area, we release and start to move down and eventually close this gap and return to, we have a small area here. And this is pretty much where price went to. We have kind of the highs there of this accumulation candle, and then price bounced from there. Yeah, so that's what I like to. That's how I like to view it. Let's have a look. We can, if I turn all this off, just to enable some areas here that we can look at. Yeah, so you can see how this plays out very nicely. This is really nice. When this area of daily demand is established and we have a nice move away from it, simply have to look for these white candles, which is accumulation, which we've shown on an indicator less chart previously. Price rallies, accumulates, rallies, and this is where price reacts. So we have a continuation pattern here. It's tested the first time. It's not enough. There's not enough order filling here. We have maybe a little bit of a deeper push, and from here we find the liquidity strong enough to drive price higher to the opposing supply up here to the upside. Okay, let's have a look here. There's some questions. Okay, Carlos is saying, aside from the imbalance and opposite zone taking out, what other parameters do you use to define an area of demand or supply? Well, primarily I use the market structure fairly, but I also use currency strength to do that. I trade very heavily currency strength and supply and demand, and currency strength can also enable you to do that as well. But I like to focus more on price to make those decisions. I'll look at currency strength divergence at an area of supply. I'll just show you what that looks like. So just as an example, you can see that on the hourly chart, when we have this 4-hour parent, 4-hour child, price started moving higher up into this area, and you can see that the histogram here is moving off. First of all, this histogram it's a currency strength histogram, so it's showing me the difference between the strength of the pound and the yen across the boards, and it's considering all of these currency pairs here. So I can see the relative strength of the British pound in relation to the Japanese yen. And this is the difference in the strength. So when this is above the zero line, we should be buying the pound. When it's below the zero line, we want to be selling. Sorry, we want to be buying the pound yen. When it's below, like it is down here, then we want to be selling. And so when price moves higher into supply, but the currency strength, the difference in the strength between the two currencies is starting to dwindle, like you can see here, when there's a clear indication that there's a lack. This is simply a price seeking liquidity more than it is people buying. And this you can see very, very clearly here. We have the poke into the very bottom edge of this area of supply. then price dumps, and we manage to cause, again, market structure failure. We cause this area of demand to be consumed by what? By the supply here, like so. And then we're in negative territory, so we hold on to the trade until this kind of shows you something else, either divergence or something else. Here as well we have, let me disable this very quickly, the trend line, like that. So we have divergence as well. We have price moving higher. We have the strength moving down. Oops, wrong one. So price is moving down like that. So this tells us that price is looking for liquidity to go short. This is not people buying. This is not the picture of people buying. Price is looking for limit orders to sell. And this you can see by looking at the difference between the strength of the pound and the Japanese yen. Cool. I think I'll stop this and maybe take some questions. I have a meeting in 15 minutes, so I just want to make sure that we get everything, questions answered before we wrap things up. Yes, divergence as an enhancer. You can use currency strength, you can use any oscillator, but I like currency strength because, I mean, this is what I know and I prefer. But I think you could probably use, I don't know, any of the other stochastics. I don't use any of them, but you could probably use, stochastics and the MACD. MACD seems to be pretty useful as well, I think. As a matter of fact, if we just put that on the chart, a lot of programming projects there. We go like this. You can see, the MACD is showing you a pretty similar thing. So we have currency strength, and the MACD is showing you a very similar thing. Most of the areas, there are a few deviations, but you can see here that for this particular price structure here, we had a really nice divergence at the same level as well, which just confirms that. You could probably use RSI. I don't use any of the other ones, but I'm sure you certainly could. The histogram is simply showing you the difference between two things. And if it's one moving average or the strength of one currency in relation to the other, I think you're probably going to see a pretty similar picture. Excellent. Good. Well, that was, does anyone else have any questions before we wrap things up? I apologize for my kind of preemptive finishing up here, but I have, as I mentioned, that meeting here very shortly. It's a great pleasure, Mike, an absolute pleasure. But just to recap really quickly, you get a chart, you mark off the chart. Let me remove, I'll just leave it like that. You want to find what is responsible for doing what. And so find a really nice area of supply or demand and use that as a reference point. So go back, find a really nice clear area. Here we have a clear area. Just make sure that we're not reacting to something else. We were. So go like that. Here's the supply here. And then find out what broke it. What broke it, we have this candle here. And this is actually the one. This is a bit of extended accumulation that caused the break. You could see we have this period of accumulation. This is the low of the candle to the left, showing you where the edge of the area is. You mark it like that. This is where we had a test. Once, twice, 3 times, 4 times, 15. Sorry, 15, 5 times. And then you ask yourself, what area took that one out? Well, we have something up in here you want to focus on. So just kind of focus, always focus on the areas that cause the damage, because those are the ones that are certainly going to increase the likelihood of you choosing the right areas. Okay, so if I just look at that quickly, for this, if you wanted to get in there, just buy here. I'd buy here, just above the area. My stop would be below, and my target would be an opposing area of a supply or demand. So where did those trend lines disappear to? I'll try that again. So I'd put my entry in here at a, let me just get rid of that, 27.63. My stop at 27, let's say 27.05. And my target I would put at an opposing area. And so for this one, we'd have to look left. So if we just leave that there, and you can see that this is going to be a continuation pattern on another time frame. So find the area. So we have, I mean, nothing here is fresh. This is all like done, but we do have this like that. This is maybe where price, it didn't even make it up there. So we managed to stop here at this, maybe at this one down here, which is kind of the highest point. Yeah, this is where we came to just here. So what's that? Also, yeah, the 3050, which is like a pair personality area as well. And we had a pretty nice reaction off that, ultimately consuming this opposing demand here. So pretty nice example there. But be careful trading in the middle because trades in between these highs and these lows are lower probability, but they can work. You just maybe have to manage them a little bit more aggressively than you otherwise would. Yes, you certainly can, Carlos. You really can look at the higher timeframes, and this is why this little study is so interesting. So you can look for. I mean, if you're in a downtrend, then there's no real reason to get out of it. If your stop has protection, then you simply hold it until you reach an opposing area of whopping supply or demand, and you can see a price comes back here and it holds. And if we look a little bit high, you can see that we have market structure failure on the daily chart just here, how price tested once, twice, we accumulate, we cut through it. So we have a lot going on there. So price is probably going to slow down once it comes up here, which is why I'm going to have a stab at trying to sell there. If we, yeah, maybe you can see here we have an accumulation, this daily accumulation candle. When price left this, we move above this, below this low here. And this is kind of at the edge. So you could kind of move it like maybe around here, but you can certainly look at the greater period areas. You always have to, you don't have to do anything, but I prefer to pay attention to what's going on in these higher time frames, because if you're not, then you're really trading in the dark. Excellent. Yeah, monthly are good. Weekly are really good. Monthly is a little bit slow. 6 months are really slow, but the weekly are really good because they're whopping, and they're really giving you a lot of good trade setups. You can also trade a weekly supply and demand and have a minimal drawdown if you're choosing these really nicely qualified areas of supply and demand. As a matter of fact, before I finish, I just want to show you an example on the dollar CAD. It's a trade we spoke about a lot on the monthly chart. The accumulation here, this is a monthly area. And price came to the pip, the 146.76. We had an enormous reaction to that. And this is just, again, we had this low that was taken out, and eventually price moved. I don't have any more price. We moved below these lows here. And the origin for that is here. And price, yeah, we had a tremendous move. And it all originated from this area of accumulation. And we had these nice green candles moving away, telling us that there's a lot of clout. And so that worked out very nicely. Super. Well, that's all I had to say for today. I better jump out. A great pleasure, Carlos. I hope the information here is useful. And if you have any questions, you're free to write. I'll put my email in here. You can write to me. Pipnodrick.com. There you are. So feel free to drop me a line if you have any questions. And until then, yeah, have a super week and weekend, and we'll see you next month in the next webinar. And thanks, FX Street, for having me. Always a pleasure.